Sales revenue for the second quarter of 2012 decreased by 1% to 1,737 million Swedish krona, a 5% fall when adjusted for currency and structure. Operating profit EBIT amounted to 135 million krona, excluding one-off items of minus 16 million. The operating margin EBIT excluding one-off items amounted to 7.8%. The after-tax result amounted to 56 million krona. Earnings per share were 0.74 krona, and cash flow from operating activities amounted to 97 million krona. For the second quarter 2012, Lindab reports an improved operating margin in spite of lower sales and increased steel costs. Lindab's second quarter has been challenging since the construction market has weakened in most European markets. However, there are positive developments to report in the quarter. Of particular note was the strong improvement in building systems performance. The ventilation business area also improved its EBIT margin. Lindab's acquisition of the Polish ventilation business Centrum Klima during the quarter is a significant achievement with an excellent strategic fit. It'll strengthen Lindab and the ventilation business in many areas. Building components operating margins were affected by weak sales momentum in most markets. Russia and the CIS market with Belarus were the clear growth markets during the quarter. The Nordic region was weaker, with Sweden now starting to decline, albeit from a high level. The CEE markets continue on a weakening trend, and sales in Western Europe also declined. Turning now to Lindab's CEO David Brodetsky. Now, how would you summarize Lindab's performance during the second quarter?
We're pleased to report an improved EBIT margin for the quarter, in spite of an underlying 5% sales decline and in spite of steel cost increases. During the spring, the momentum of business generally and construction specifically has been weaker in many markets, and Lindab has of course been affected by this. However, our ongoing and strong focus on costs, as well as our focus on gross profit margins, has supported our financial performance in the quarter, enabling us to report a slightly improved EBIT margin of 7.8%. To have achieved this in the light of the tough market conditions we're experiencing is a credit to the whole Lindab team.
You were able to secure the acquisition of the Polish ventilation company Centrum Klima during the quarter. Can you explain the importance of this for Lindab?
We're very pleased with the Centrum Klima acquisition, which will strengthen our ventilation business in a number of ways. First of all, with Centrum Klima, we have become overnight a leader in the Polish ventilation market, which is the largest and the fastest growing market in Central East Europe. Secondly, we further consolidate fittings production and generate synergies in our main manufacturing units. And thirdly, Centrum Klima has very good sourcing arrangements in Asia for traded products, which will allow us to improve the performance of distribution through our already existing branch network in other countries.
In the Nordic region, Lindab's largest region, sales adjusted for currency and structure declined during the quarter by 6%. Sales in Western Europe decreased by 6%, also adjusted for currency and structure. Sales in the CEE/CIS grew by 2%, adjusted for currency and structure, with Russia being the main driver for growth in this region. Per Nilsson, CFO at Lindab, is with us now. Sweden's been the main growth market in the last couple of years for Lindab, and it now seems that this market's weakening. Could you talk more specifically about what's happening in Sweden and how this affects Lindab?
Yes, Sweden is a very important market for Lindab. It represents almost 25% of group sales and has shown good growth since 2009. It's no secret that the Swedish economy and Swedish construction market is slowing down in 2012. Building statistics are showing a weakening trend in both residential and non-residential buildings. With our good market position, it's no surprise that our sales have also declined, although it has to be said, from a high level. The biggest impact for Lindab is in our building components business area, due to the fact that over 40% of their sales are in Sweden.
For the ventilation business area, sales revenue during the second quarter amounted to 902 million krona, which compares to 896 million for the equivalent period last year, an increase of 1%, or minus 4% when adjusted for currency and structure. Operating profit, EBIT, excluding one-off items, amounted to 69 million krona, which compares to 62 million for the equivalent period last year, an increase of 11%. Weakened demand was noticed in both the Nordic region and Western Europe. At the end of April, Lindab acquired a majority holding in Centrum Klima SA, a leading Polish HVAC systems manufacturer and distributor. Centrum Klima is based in Warsaw and listed on the Warsaw Stock Exchange. After completion of a tender offer, Lindab now holds 97% of the shares and will delist the company. Centrum Klima employs around 200 staff, had net sales of around 200 million Swedish krona for 2011 and has recorded operating margins averaging 10% over the past 5 years. In June, Lindab received 2 important ventilation orders in Belarus totaling 14 million Swedish krona to provide the complete heating, cooling and ventilation solution for existing building systems customers. The first order is for a shopping centre and the second for a furniture factory. Both orders are due for completion before the end of the year. Turning back to David Brodetsky now, the ventilation business area showed an improved EBIT margin in spite of a 4% decline in sales, adjusted for currency and structure. Now, what's the main reason for this improvement?
The business area has made many operational and efficiency improvements over the past 18 months, which are having an increasingly positive impact on the results. Some examples of these are transferring comfort production from Denmark to the Czech Republic, transferring production from Russia to Estonia, and improving the way we do business in the USA. More is to come as we benefit increasingly from the initiatives related to the cost-saving plan we announced back in January.
For the building components business area, sales revenue during the quarter amounted to 576 million krona compared to 618 million last year. That's a decrease of 7%. The acquisition of Plania's sandwich panel and industrial products business contributed with 5% growth. Adjusted for structure and currency effects, sales decreased by 10%. Operating profit, EBIT, amounted to 51 million krona, which compares to 75 million for the equivalent period last year. Sales in the Nordic region declined by 10% during the quarter, following adjustment for currency and structure. The weak CEE market situation continued, with declines in both the residential and the non-residential segments. David Brodetsky, the building components business area had a weaker quarter, with sales falling 7%. And a lower EBIT margin of 8.9% versus 12.1% for 2011. What's your view about their performance?
Sales were hit by a weaker Nordic market, as well as the continuing tough conditions in Central East Europe. In addition to lower volumes, the comparison with 2011 was made harder due to the business area benefiting from lower Asian steel costs in Q2 2011, but not this year. The business area focused on what we can control, which is costs and margins, and in the light of the extremely tough market conditions, produced a very creditable, almost 9% EBIT margin.
For the building systems business area, sales revenue increased during the quarter to 259 million krona, a 7% rise, with the figure for the equivalent period last year being 241 million. Adjusted for currency effects, the increase amounted to 8%. Operating profit, EBIT, excluding one-off items, amounted to 24 million krona, which compares to 9 million for the equivalent period last year. Sales are developing positively thanks primarily to Russia and the CIS markets, whereas demand has been weaker in Western Europe and the CEE. The order intake was 26% higher during the second quarter compared with the corresponding quarter in 2011, mainly driven by the Russian market. During the quarter, Building Systems received 2 large orders in Russia totaling 80 million krona. One is to design and supply several steel buildings near Grozny in the Chechen Republic. This order comprises 4 factories with a total surface area of more than 27,000 square meters. The other is to provide the Russian mining machinery company Joy Mining with a combination of single-story and multi-story buildings for production, warehousing and offices in the Kemerovo region of Siberia. David Brodetsky, Building Systems further strengthened its performance in the quarter. How would you explain the turnaround?
It's a combination of 3 initiatives. Firstly, a continued focus on the strong Russian market, which was the reason behind Building Systems sales growth of 8% in the quarter. Secondly, the business area was able to improve sales price levels compared to Q2 last year. And thirdly, cost savings were achieved in the European operations of the business area. All these came together in the quarter to produce an EBIT margin of over 9%.
Turning back now to Per Nilsson, CFO at Lindab. Euroconstruct recently downgraded its construction forecasts, pointing to a negative growth of 0.5% for Lindab's markets in 2012 and marginal growth in 2013. Do you share their view?
First of all, we were not surprised that Euroconstruct downgraded its forecast, since the macroeconomic situation has worsened in the past 6 to 12 months. We share their view that the market recovery will take time and some markets will get worse before they get better. However, the speed of the recovery still remains very uncertain and will be affected much more by overall macroeconomics rather than by construction-specific factors. With the possible exceptions of Russia and Norway, demand in our market is therefore unlikely to improve until business and private confidence recovers and available financing improves, and this will take time.
And now a final question to David Brodetsky. Do you still believe you'll reach your 10% 2014 goal with the current market outlook?
The answer is yes. We were not counting on any strong underlying market growth when we fixed the target. In January, we said that our goal is to meet the 10% target for 2014 in more or less stable market conditions, which is what we have. The plan to fill the gap from the 2011 underlying 5.9% EBIT margin to 10% comes half from cost activities and half from sales activities to take market shares. The sales part means organic sales growth of 8 to 10% over the 3-year period to 2014, which we believe is achievable in the current environment. It's true that the markets are a little weaker right now than we expected a few months ago. We might have to make some adjustments to our plans as we move forward to account for this and other market developments, but nothing has fundamentally changed in our commitment to meet the 10% target or in our belief that we will reach it.
That was Lindab's President and CEO David Brodetsky, and you also heard Lindab's CFO Per Nilsson. And that's all this time round. We'll be back on the 26th of October when the results for the third quarter of 2012 are to be presented. Thanks for being with us, and bye for now.